To start off, guys, let's get going. I want to start. There's a few still joining, but we're going to start going ahead. And I want to start us off today with a staggering statistic. Statistic you might have seen before. The statistic we want to start with: 94.6% of companies started failed to sell. They closed down, and this is a big problem. This means that the majority of business owners that we see, they never get to a place where their business is built in such a way that one day they can exit the business. And why it's so hard for us is the majority of business owners invest everything back in their businesses. They spend a lifetime building this asset that generates income, but it doesn't automatically mean that it will be a business that can one day be sold. We are so involved, and often we think when we build the business, when you want something to be done right, what's the answer? You do it yourself. But that's often a trap in itself, where we get so busy and so operationally involved, we never design the business in such a way that it doesn't need our involvement, that it can be sold one day. This matters to all of us, and it's a problem that we want to solve. My name is Johan Tolga. I'm one of the partners at Auric. And in my experience in mergers and acquisitions, which I was involved with over a decade, I witnessed this problem continuously. So many owners of businesses would come to us and say, Johan, please help us. I need to sell my business. I want to immigrate. I want to retire. And unfortunately, at that stage, the business was never built in such a way that it can be sold. The vast majority at that stage still were never able to sell. We see this not just in South Africa. We have offices in Durban, Cape Town, Johannesburg, but we witness the same problems in the UK and in the US. The fundamentals of the problem and the way to build a business remains the same, regardless of where we are in the world. These are the things that we want to discuss today. These are the problems we want to go through. And we are trying our best to develop methods that we can overcome these exact problems. Before we get to that solution, though, we always have to ask ourselves a question. Why do we do what we do? That's a personal question, and each one of us needs to decide why it is. And sometimes that gets hard. You know, there's challenges that we face in building this business that we work, and there's challenges that we see. So we asked you when you registered for this event, what are the challenges we want to hear from you? What are the top questions that you had, and what are some of these challenges that are coming through? So let's just have a quick look at what came through. From some of you in the retail industry, finding what we offer our clients that make us stand out from the rest. That's purely positioning. We're going to be talking about that. It's a difficult landscape. On the glass and aluminium, scalability and systems implementation. Yeah, scalable. To build a business that can scale is very, very hard if you don't have the systems that underline that. We'll be talking about that for sure. From the engineering industry, inconsistent inflow of work. We see this engineering firms all the time, especially construction businesses. They have these great projects that they get involved with, and then everything is good. And all of a sudden, there's no work coming in. And then there's a good project, and then no work. It's very difficult to build a future and to predict what's going to happen in the business if we don't have that. So yeah, definitely a good problem we're going to talk about. formulating a clear and executable plan backed by a clear roadmap from the manufacturing industry. Sure, I think we all want that. Something we will look at. From the media industry, cash flow, decreasing budgets, junior staff retention. That sounds like 3 different problems completely. Cash flow is tough, yes. Decreasing budgets, that talks about our customers. And staff retention, we're dealing with millennials if we're talking junior staff retention, and that's a challenge in itself. So yeah, definitely a problem that we have to look at. Last one from the financial services industry. My business is growing and I need to make a manpower decision. Business is a team sport. Manpower decisions we need to make all the time. How to make it and how to make the best ones, that's the real challenge. Definitely something that we're going to be talking about. So these challenges that we are hearing from you, we see this all the time. And it's because the intention is there to grow the business. We have these challenges because sometimes these hit us like potholes and they come in the way of us going forward and making progress with our business. But you're not alone. The businesses that we surveyed, 88% of them all show intention that they want to grow. So to be honest, I'm not exactly sure what other 12% said, because inflation is real. If we look at what's happening in the US, what's happening in the UK, they are facing insurance that they've never seen or they haven't seen in 30, 40 years. In South Africa, we're a little bit more used to inflation, but inflation means our costs are rising consistently. If we don't grow our business in terms of top line or revenue, that just eats into our margin, and it's a very, very dangerous place to be. There are businesses, Lawrence, I know, for example, your business. It's a business with high volume. High volume businesses have low margins. And if we don't grow those two separate, it's very dangerous. So these businesses try. They want to grow, so they try different things. Unfortunately, it's not working. It's not working because often the entire strategy for growth is to rely on hope. Folks, hope is not a strategy. Hope will see that you spend less than an hour a month even talking about growth. The entire team is unaware of what the growth strategy is in the business. If they're not sure, how are they supposed to help you get there? The misaligned functions that we see in these businesses are all over the place. Again, it's a team sport. And if they're not aligned to the growth strategy in place, what do we expect that's going to happen? But further to that, the business owners then went and seek help. They go out and they say, we need something that can help us grow. They want growth, but what they got was advice. Advice does not change anything. Advice is cheap and theory is plentiful. We can find that, but that doesn't give you anything because the implementation is the hardest part. Less than 5% were able to implement any of these strategies. So the reality of this and what it means for the business owner is that 94.6% of these businesses still fail to sell. And unfortunately, family businesses, with a percentage of 74% of them, never make it past the second generation. Family businesses are still some of the best run businesses in the world. And if they close down, it's at a great loss, not just to the families, but the customers, the suppliers, the staff. These are the problems that we want to solve. These are the problems that we at Aurik have been trying to solve for the last 2 decades. So let's have a bit of a look back into the history. When Aurik started, Aurik was founded by Pavlo and Karim. And they said they want to solve these problems and they want to learn through action. So the best way to learn, to see if your ideas or your methods work, is to go and apply it, to see if we do it, what's going to happen. So over a period of 9 years, Pavlo and Karim started, built, and sold 12 businesses. Now the result out of this was fascinating. They had some really good successes, and some really challenging times. But the most interesting part was that the second half of these businesses took only half of the time and only a third of the investment to reach the same value, but also reach a point where these businesses became sellable. It means that whatever they tried was working, and they were refining these methods on how to get that right. what underpinned all these processes is not theory, it's specific activities. And it was codified then, and it emerged at 207 separate activities that the business has to go through to rebuild it in such a way that the entire business is built into a business that can one day be sold. This has been continuing. And for the last, if we bring it back right to where we are today, we have applied this to over 3,000 businesses across continents and across sectors. And the clients that go through this, they have shown incredible results. They've shown 28.9% annual turnover growth, and the profit grew at more than 32% per year. It means that when they apply this, it worked for them. One of the interesting things that came from this is there is a summarized version to say, what are the 9 most crucial challenges that every business will go through that we can look at and see if we solve these, we can make the business change. So let's just have a quick look to see what that looks like in most businesses.
To increase the growth of a business while deepening its value, every business owner has to resolve 9 challenges that present over time. In terms of leading my business, the first is relevance. After years of effort, how do I find the inspiration and motivation to remain relevant in a noisy, forever-changing, increasingly competitive environment? Time. Most of us spend more time doing and less time leading. How do I build my business to free up my time from daily, weekly, monthly operational activities to focus on growth and value? Control. Because you carry the business's entire risk, the need to maintain control often places you front and center of your business 24/7. How do I free myself from the tentacles of this control trap and delegate responsibility to get my team to do the heavy lifting sustainably? Across sales and marketing, how do I find, win, and hold customers in a crowded market where customers have become more discerning and ever more skeptical? And how do I get this done without having to reinvent marketing strategies constantly? Operations. Why am I constantly being called back into operational activities that rob me of the time I need to invest in growing revenue and profit that would build my asset of value? Team. Why in a world where people are more skilled, educated and capable, is it so hard to find the right people to do the right thing at the right time all the time? Without this, creating sustainable and reliable growth becomes impossible. Looking ahead, how do I get my business growth formula right in a way that would see revenues and profits increasing on a more consistent basis? Am I building a job or an asset? If without you there is no business and future, then you won't find a buyer when the time comes to exit. A job can't be sold. And wealth. How do I build my business into my greatest wealth generating asset? To maximize your income and monetize your years of risk and investment through a profitable future exit, you must build in the 5 levers of asset value today. Businesses are not bought. They must be built to be sold.
I want to share an analogy with you. So I know, David Green, I know you're sitting in Cape Town, so you're familiar with ships. Nicola, you're probably sitting in Stellenbosch, if I remember correctly. So you might not see a ship from where you're sitting, but I know Pri is sitting in Durban, and he can see a ship from where he's sitting. I want to share the ship analogy with you because when we use an analogy, it's easier to look at our own businesses objectively. It helps us to see the wood for the trees. It helps us to understand, if we look at it from a different view, what it means for our businesses. So if you look at a ship and you wanted to go out to the harbor and decide on which ship you want to start sailing, you go to the harbor and you look at one and you go into the bottom of the ship. You want the ship to move and you want it to leave the harbor. So you go down into the engine room. The engine room is where everything starts. It's where you put the fuel in and you get the movement within the gears in the right place so that the ship can start moving. Once that's in place, you need to get some crew in, because the crew needs to help with the engine together, make sure it continuously runs, and that the ship can operate. Once that's in place, the ship still needs some direction. You can leave the harbor, but if you don't know in what direction it's going, the ship might just get into deep seas without knowing. So the captain of the ship needs to move all the way up to go to the bridge. At the bridge, there's complete 360-degree views. There's GPS in place, and they can see exactly where the business needs to go, where the ship needs to go. Destination is then chosen by this captain. If you leave a harbor, whether you're leaving it from Durban or whether you're leaving it from Cape Town, you have to decide, are we going to India or are we going to the Caribbean? Because those are two very different directions. And if you don't choose the path quite early, it might take you 3-4 times as long to get there. For business, we believe there should only be one destination. And this ship and your business should sail towards what we call an asset of value. Asset of value becomes the guiding principle for a destination of where the business should be and how a business should be designed. So let's go through this. Let's have a look at the layers of an asset of value. The first part, the first layer of an asset of value is the positioning within your business. The positioning says, who do you serve? How do you stand out between all the other competitors with that? How does this product and service that you have solve a problem? And often, if those are similar to your competitors, the game is won when you have a very well-defined customer experience that you take them through. One of the questions we had quite early on, one of those top questions was, how do I stand out from the crowd? That's a very important part, and that's the first layer here. How do we, in your market and in your industry, set ourselves apart through the eyes of our customer? We can't just decide this is our product and the world must love us. We have to ask our customers through their eyes what it looks like. The second part of this is the system of delivery. This is the commercial functions within the business, getting the product and service to market reliably and consistently. This is often where the majority of the chaos happens. In one of those questions again, we had somebody say they want to systemize things to plan for scalability. If the system of delivery is not built, that's where most of the chaos explodes and where the fire resides in the business. Very often, this is the area that pulls the owner back in and it holds the business back, and it almost holds the owner captive in that area. The third layer of an asset of value is the team. How do we get the right people that operates this system of delivery to ensure that that positioning that we've chosen and the promises that we make our customers are fulfilled? I'm going to go back to one of the questions that somebody asked, and they asked about manpower. Came through twice. Very often we see when businesses grow, and they grow especially fast, the owner would think, okay, we need to get a great operations manager, probably the best operations manager that exists. So you get the CVs, and the CVs, of course, they tell you the 100% truth, firstly, and secondly, they will always show you that this operations manager is the best by far. So we go to market, we get this best operations manager, put them in place in the business, and hope that they can do things. I don't know how many of you have experienced this, but a year later, you realize they had no clue what they were doing. It took you a year to realize that, and the amount you spent on salary is all gone, because a year later, you've lost that, and you're still in the same chaos that exists. We prefer to turn those two around. Before going to market and finding this best operations manager, if the system of delivery is built carefully and the role that the operations manager needs to fulfill is so clearly defined, and the role has been split into activities that can be seen in a sequence, that can be measured, and it can be taught, that helps you to define the role clearly. Then you go to market and you find an average operations manager. Still look at the CV, just with some glasses. An average operations manager then comes in, and their roadmap and the entire role is clearly articulated for them to operate in. And doing it in this way and in this sequence, we see much better results. So when this purposeful team is built, we look at the next layer of the asset of value. And that is the growth that comes from time, which has been made available to the business owner. The time is now allowed because the team is operating the system of delivery. And it gives the owner time to focus on new markets, new product development, and innovation. Because if you have the time available, those things will take your business to the next level of growth. Ultimately, we need to build the value. That is the last layer of the asset of value. The value of your business without you as the owner being there, physically operating it. The outcome of building it this way is not just growth in turnover, but because your efficiencies and effectiveness in the operations is in place, it leads to growth in profit as well. This is the way we have to build the business. So I want to share a story with you. One of the clients that we worked with a number of years ago, and this guy, his name was Jack, came to us when he was about 54 years old, but he was frustrated. He was tired. He was on the brink of a burnout. He came to us initially saying, I want to sell this business. I want out. I don't want to be involved anymore. I'm working 16, 17-hour days. I can't do this anymore. We started asking questions about why and how it currently works. And it turned out he was operating in 5 different industries and then doing all sorts of things that just take time and does not move his business anyway. We decided to work with him. And I want to give you a quick view of what are the things that we achieved with it.
Jack was a 54-year-old industrial baker who started his business at 29 and developed it into a diversified baking company that supplied fresh baked goods to hotel chains for their continental breakfast, operated a string of retail bakeries, distributed flour, and installed and serviced baking systems for hotels and supermarkets. The ongoing challenges and complexity drew heavily on Jack. He was worn out, exhausted, and had lost his love and passion for the company. Despite earning a comfortable lifestyle, he could not get the price he wanted when he tried to sell. Working with Auric, Jack focused on providing baked goods to hotels and wound down the other business lines. This focus allowed him to build out the commercial systems that would run the business and empower his team to operate them. This released Jack's time to identify new innovations. He outsourced distribution and secured freezer-to-oven technology that solved multiple issues for his hotel clients. It also allowed him to tap into supermarkets, enabling next-level growth. After Auric, Jack's business growth system focused on solving a single problem: the 365 days a year onboarding of fresh-baked goods to hotels for continental breakfasts and supermarkets for morning trade. His commercial systems and team ensured a consistent, reliable client experience. Rather than sell, despite increased valuations, he succeeded his business to his sons.
I want us to look to the future. We're going to build businesses that will need to be sold at the end of the day. You're going to have to get into a deal-making stage. And at the deal-making stage, when you want to sell the business, valuation is a crucial point. And we have to understand valuation way up front because we don't want to be surprised about how these calculations and metrics work when we get there. So just by a show of hands, who has ever bought a business? Has anybody gone through that process of buying? Rudolph, I can see. Jasper, I can see you. Okay, so you guys have had some exposure to what this looks like when you buy the business. Let's play that role and see what it's like when a buyer wants to buy the business. The first part of where we're going to start is an average valuation starts on a multiple of 2. Multiple of 2 times your EBITDA. This would be your profit before tax. Now that's the starting point. We want to see which levers do we have control over that we can influence prior to that deal-making day that we can see an influence in this. So we're going to use an example. So I want to apologize for the folks in the UK and the US. On the slide, currently I've got rands, no dollars and pound signs. Just bear with us, the calculations still work. Okay, so in this example, I've got 5 million rand that we've made in profit. This is the EBITDA. Now, in a starting point of a multiple of 2, we're starting off with a valuation of 10 million rand. So now the buyer comes. Rudolf decides he wants to buy another business. And he wants to see what exists in this business. Now, to go through that period, there's 2 things that they are interested in. Understanding the future of this business and understanding the risk that comes with buying this business. When you want to get answers to that, you have to go through a due diligence. So a buyer will always request that due diligence at this time. In the due diligence, there are 3 areas. They'll always do legal, they'll do financial, and then they'll do the operational due diligence. Now, this is where it gets interesting. Finance and legal has to happen, and those things need to be in place. But in the operations, they want to understand how everything works. And this is where you've got some power. If you can show to any buyer that your positioning in your business is so well defined, that you own your segment in the market, and the future of your brand is locked in because you take your customers through such a well-articulated experience that they will continuously buy from you. That raises the level, and it takes you to a multiple of 3. The next point that you have is they want to understand how the operations work without you. They want to see if there are a bunch of cowboys running around doing it, or if there are proper systems in place and how it runs. Rudolf smiles like he's seen the cowboys doing things like this before. The third part, and that raises the bar to the next multiple. The next part is the team. Who makes it happen? Now and in the future. Because we're looking into the future of the business, if you can articulate that there's a team running this business without you as the owner, it rises the multiple of this valuation. The next point is growth. We always look to see what the future holds. We look back at the past. And if you show that the business has been growing because the owner of the business has been focusing on the higher level of growth, it is safe to assume that that growth will continue, and it adds another multiple to the valuation calculations. The last point is the biggest value contributor in the business. How much of this business runs without you there? Because the result of that shows you the difference. If the buyer goes through this process and he sees none of these points are there, unfortunately it goes the other way. Because it points towards what has been built. We have a job, which could be a business that generates good income, but not sellable, or was an asset created, which is a business that continues to generate the profit, but without the owner being there every day. I want to ask you a question about today, where you are, and how does this relate to your business? Because the decisions we make today sets us up for what happens tomorrow. Our intentions needs to be clear. Our intentions needs to be in a specific direction so we know what our future holds and what to do to get there. We believe there are only 2 immediate strategies. The first strategy is to scale, dominate, and grow. Now in this, we want to see how we deepen our investment in the business to make sure we build the structures, we build the muscle and the capacity to continue to grow that. The second option is also growth. We are putting profit back into the business to show that there is a future value for this. And the intention there is to say, in 3, 4, 5 years' time from now, we will exit the business, whether it's through a sale to a third party, succession through family, or even a management buyout. We have to be clear on this. If we focus on the scale and dominate, we have to look at what we can do to invest in the business and use the 3 different types of growth to really get to the next level. What we do today is crucial for where we will be in the future. So when we work together, we want to see how we can shorten that period. And let's talk a little bit about how we get that done. To build a business into an asset of value will take most businesses 5, 6, 7 years from now. I've shared so much information with you, you can probably do it yourself. It'll take that long. But if we work together, we're going to do it a bit differently. We want to sail together. We call it sail together because it really is a partnership that we enter into. And we want to see that the best outcome is achieved between us. We do not consult or advise. It's a collaboration. Now, through this there's an entire 24-month period that we would work together. For the first 3 months, there's the diagnostic phase. We want you to see your business through different eyes. It might feel like there's an X-ray machine or a big spotlight being put on the business because it shows you what your business looks like because you've gotten used to the way things are. And if you see it in different light, you will see the risks and you will see the opportunities that exist in everything that you already have. Once that's in place, we need to understand what the goals would be and how we're going to drive the strategies to achieve those goals. We look at positioning. Positioning is the tip of the spear. And if we want to build a customer-centric business, it has to start with redefining that positioning so you know where the focus will be. After that, we focus on the system of delivery. This includes building the business and all the commercial functions to make sure the business works efficiently. One of the questions that came up earlier was how do we ensure that our sales conversions work? This was from the wine industry, and I wasn't sure it's difficult to convert people to drink wine. Apparently it is. Maybe it's difficult because there's so many different types of wine. But that becomes part of the sales strategy and the methods of how to convert sales in that section of the business. After this, we go into the team. The team is a crucial component to make sure they are aligned to the growth part of the business. We then focus on growth. Growth is where the business owner is extracted from these operational involvement and they can focus on that next level growth. We believe it takes an entire team of people to achieve this level of impact in a business. 1, 2, or 3 people just cannot achieve this. So we put it together, when we build a plan for each business, there's an entire team of Aurik facilitators that gets assigned to work with the business owner and the team. And through the period of 24 months, you will meet each one of them at the right time. We combine this with a digital dashboard. The data that the business generates is crucial. But if we don't do anything with the data, we're missing a great opportunity. The dashboard pulls the data together that helps us make future decisions, better decisions, and more consistently. It's not good to just look at the history. You can have a good income statement, but that shows you what's already happened. We need the data to help us look into the future. And this is a crucial component by doing it faster. How we engage with you is also slightly different to what you might be used to. We don't consult, we don't advise, we don't teach, and we don't train. We are looking for partners. Engagement will always start with meeting. We want to see if there is a fit between the two businesses, to see if there will be lasting impact, and if a partnership would work well. We also only work with businesses that we are very sure that we will have a good impact in. We will go through that process to determine that fit, both ways. Both parties need to be happy before we continue. Then we get to the investment stage. Aurik does not invest in businesses in a way that we take equity, but our fees are based on the performance of how we work together. We link the fees to turnover, making us exposed that if your business does well when we work together, we do well with you. The opposite is also true. If your revenue dips, we dip with you. And that makes us true partners. We get straight into the implementation. When we work together, it's with you as the business owner, but also with your team. When there's alignment within your team, implementation works better, and we move the business along at a much better rate and a much more successful implementation. The last part is that you'll be part of the Aurik ecosystem. We have built a business that has global networks, and if it's in our interest to help you, it's in our interest to help you, serve you through the networks that we have established. I want to ask if anybody knows this acronym. Adrian, you do look confused, and Rudolph, looks like you've seen this one before. We've all seen ROI. David, is that a smile? We've all seen ROI, but ROT, it means return on time. We all have exactly the same amount of time. It's the one thing we never get back. We all have 24 hours a day, and what we choose to do with that is completely in your control, and it is your choice. We don't want to see our ship out at sea, rusted, no fuel, lost in the deep sea. We fundamentally believe at Aurik that a business should be built in such a way that it's like a ship that arrives at the port where you can offload that cargo at that port, where you have not just invested everything that you have, your time and your money and your assets back in your business. You need to be rewarded for that at the end of the day. And success in business to us shows that this is exactly where it should go. We should achieve that point together. Before we go, I want to ask everybody to complete a poll. We have a quick poll that we want to bring up. I shared 2 immediate strategies with you earlier. And the 2 strategies show these 2 options. They're on the screen now. So if you can see that, you click the poll. I see them coming in. I see them coming in. This is anonymous, so you don't have to worry about who is seeing what option you're clicking. This is purely part of understanding our customers and to seeing where your ambitions lie and where you want to go. Okay, I see they're coming in. It's quite a tight race. Looks like there's a lot of ambitious guys in the room. Okay, we're going to end it up. Very close. We've seen with all the politics happening, often you wonder how many business owners are still willing to build businesses in South Africa? How many want to immigrate? Unfortunately, that's reality too. But we see that the biggest opportunities is still here. There are so many tough times out there, but in South Africa, the opportunities still exist. Okay, but is this showing to everybody? Can you guys see the results yet? Okay, it will come up. Okay. Very close indeed. Very interesting. Let's share the results. Okay, I want to see in our crowd, let's just see who's all here. We have some of our broader team that is in the US, and I know in the US, it is very, very early. I know it's very early. If there's any, yes, I see. Pablo, I'm surprised that you're already awake.
It is 6:41. It would have been 5:41 if this event was a week ago, because we're now in daylight saving time. And I've got to tell you, it is quite something to manage. But very, very nice event. Thank you, Johan. Nice to see a lot of you here. Adrian Boyson, we've seen you before. STF Tool and Industrial. I'm pleased to see you still up and running and you making things happen. Kirsty, who bought a business for R1 and built it into something remarkable. Lauren, the story of Jack the Baker is your story. He started where you did. He started where you did. I know that story intimately. He started where you did. He had a small retail store and he's now built it into a multinational business. I don't think he's cleverer than you. I don't think he works harder than you. I don't think he does so than anyone on the screen. Rose, I'm going to be in your neck of the woods in the UK. I'm flying this evening, in fact. And the reason I'm in the US at the moment is we have just signed for our clients a remarkable M&A transaction. M&A being companies that specialize in buying businesses and selling businesses on a global basis. And the reason for this is that a lot of our clients turn around and say, well, Aurik, thank you very much. We certainly get to a point where we can build a platform for growth. We get the growth out, But how do we now accelerate our growth by acquiring underlying businesses or competitors? Or alternatively, how do we exit our companies for remarkable value? We stick to our knitting from an Auric perspective, and we work then with partners who align to our way of thinking, our culture, at which point in time we introduce our clients to those individuals, knowing full well they will do the right kind of job that's needed. David, I'm not seeing your eyewear brand or your watch brand right across the Midwest. And it is consumer heaven over here. This entire country just wants to spend money. You've got to get your products out into the Midwest, my friend. The time has come now. Johan, thank you very much. I'm not going to take up more time than that. Great presentation. Thank you.
Thanks, Pablo. Yeah, there's a few people that joined us from America. It's very early. Thanks for joining it even at a time like that. Folks, I want to end up with the next step. As the Auric broader team, this is a team that sees new business owners, probably 4 or 5 of them every week. They build up incredible knowledge and they understand the pains and the challenges that these businesses go through. I would invite you to meet with them. It could be a very valuable meeting. See what they have to say and see how it feels when you can discuss your business with somebody that understands these growth pains and understands what it takes to change the business into something that you want. So I would urge you to take up the opportunity. They might reach out to you, take the call. Let's see if there's value in meeting. Let's see if there's value in working together. We fundamentally believe if there are people that have the guts and the courage to build businesses, that's what we focus on. That's what we want to support, because if they do well, everybody else does. Thank you so much for joining us today. It's been a pleasure seeing all of you.